Most investors do not underperform because they choose bad investments. They underperform because they make investing unnecessarily complicated. In the last video, I showed how to use JustETF to reduce hundreds of ETFs to a small, manageable shortlist. This video takes the next step. It shows how to turn that shortlist into a simple ETF portfolio that is easy to maintain and realistic over decades. That's because ETF selection alone is not enough. Portfolio structure determines whether you stay consistent long-term or abandon the strategy at the wrong moment. At the core of my portfolio, I always want one global all-world equity ETF. Examples are ETFs tracking the MSCI World or MSCI All-World Index, or the Vanguard FTSE All-World ETF. You can find the ISIN codes for these ETFs in the video description below. This single ETF already invests in thousands of companies across developed and emerging markets, all in one fund. That's because global diversification is already built into the index. For many investors, this one ETF alone is already sufficient. Everything that follows in this video builds on top of this foundation. For investors with a 20 to 30-year time horizon, I personally stay away from bond ETFs. That's because over long periods, equity market risk decreases significantly. There have been periods like the lost decade, where equity markets delivered poor results for several years. However, over a 30-year horizon, the impact of such periods becomes negligible. In countries like Belgium, bond ETFs are even less attractive. Coupon payments are taxed at 30%, which permanently reduces compounding. Bonds reduce short-term volatility, but they also reduce long-term growth and tax efficiency. This is why, for long horizons, I focus on equities. Another principle in my portfolio is currency denomination. I prefer ETFs denominated in euros, which is my home currency. Currency risk adds uncertainty without improving expected returns. Over the last couple of years, the US dollar declined against the euro. As a result, many portfolios suffered losses despite solid market performance. By choosing euro-denominated ETFs, I remove an extra variable and keep the portfolio easier to manage. Beyond the global ETF, I like holding a developed markets ETF and explicit European exposure. A practical example is an ETF tracking the MSCI Europe Index. Over the past 5 years, MSCI Europe delivered lower returns than MSCI World. Over the last year, however, MSCI Europe actually outperformed MSCI World. That's because leadership rotates between regions. This is not about prediction. It is about balance. Different regions perform well at different points in time. I also include an emerging markets ETF. Emerging markets represent a large share of global growth, have different economy drivers, and reduce concentration risk. A practical example is the Vanguard FTSE Emerging Markets ETF. This ETF provides exposure to China, India, Brazil, and other fast-growing economies. It invests in thousands of companies across multiple emerging regions. You can find the ISIN code in the video description below. This adds long-term growth potential without unnecessary complexity. For all ETFs in my portfolio, I strongly prefer accumulating ETFs. Distributing ETFs are inefficient in high-tax countries. When dividends are taxed at 30%, a large part of compounding disappears. Think of compounding like a snowball rolling downhill. If 30% of the snow is removed every year, the snowball still grows, but much more slowly. Accumulating ETFs reinvest dividends automatically before taxes apply at the investor level. This preserves compounding. I explained this difference in detail in a previous video, which is linked in the description below. With one global all-world ETF, a developed markets ETF, a European ETF, and an emerging markets ETF, you can build a portfolio that is low-cost, tax-efficient, globally diversified, and easy to maintain. This setup avoids unnecessary decisions while covering the entire global market. I'm curious to hear your approach. You can leave a comment with your go-to ETF, or an ETF you think is missing from this setup. Different perspectives help everyone improve. This video is for educational purposes only and does not constitute financial advice. Always do your own research and consider your personal situation before investing. A simple ETF portfolio is not about perfection. It is about consistency, tax efficiency, and staying invested long-term. In the next video, I'll explain how to invest into these ETFs over time, including dollar cost averaging and lump sum investing. Subscribe if you want clear, practical ETF investing content for European investors.